All right, guys, the big story of the day, while the market eagerly is awaiting Uber's debut on the New York Stock Exchange tomorrow, what can we expect from the tech unicorn further down the road? We have Howard Yu, Lego Professor of Management Innovation at the IMD Business School, joining us now. And Howard, before we get to your thesis, the Wall Street Journal and others reporting that Uber may price to the mid to low range of the price target here between just around $45 a share. The fact that we are seeing Uber maybe likely to price at the low end, do you think that this is just strictly a result of what we saw when Lyft went public back in March?
Yeah, there's probably the long-term vulnerability of their business model as well as the short-term sentiment, right? We see the strike is coming and all this negative news coming up. But eventually what we need to look at is a company that are not making any money, and also their core business is slowing down, and that's a really bad position to go after IPO at this moment.
So when you look at Uber and Lyft right now, I think some analysts have made the case that they're quite different businesses because Uber has the food delivery business, Uber is trying to do autonomous trucking. I think they bought Auto, right, for $600 million a couple years ago. But are they, I guess in your view, kind of just getting people from one place to another, and they're really not so different? And then the follow-up would be, does one company have to win the whole market?
Exactly right. I mean, you're looking at as one filing. What is really distracting is they try to paint a rosy picture around Uber Eats, Uber Freight, and all this jump on electric scooters and all these new businesses, trying to distract our attention to this new sexy thing. Meanwhile, their core business is still relying so much on the top 5 cities, the top 5 cities delivering something like 24% of their overall revenue. That's an overly reliance on just a handful of cities. And meanwhile, you're seeing all this strike. It really displayed the vulnerability of their business model.
But do you think there would be a world in which Uber could double down on those top 5 cities? I think they probably have a lot more pricing power in New York than they're currently exercising. Would that be a sustainable strategy, or do they have to have a win in every market that they're trying to play in?
Well, depending on the valuation we're talking about, right? Because the valuation we're talking about here is really a playbook back in 2-3 years ago. We thought Uber can write an app, garnering all this user data, build a smart algorithm, and rolling out across the world. When I'm in Singapore 2 weeks ago, I saw Grab is the major play in that market. When you travel to the Middle East, that's Careem. When you're in China, that's Didi. So every single market, you see this latecomer, this copycat, really dethrone Uber, its leading position. And what it displays is that whole idea, you build one single platform and dominate the world, has coming to an end. Huge implication from a valuation perspective.
Howard, given that just given the competition they are seeing, how overvalued do you think Uber is?
Well, you know, if you're thinking about what Uber going forward would look like, probably would continue to win in US market in an oligopoly position against Lyft. Maybe in London, they still have a secure base, but all these fast-growing regions, except they had a minority share in one of these local players, they really don't have a major operation. So, you know, give and take maybe half or quarter of the valuation we're talking about because of the growth prospect.
So it kind of sounds like when we're looking at Uber's current model, and I think it's really interesting looking at that global piece that's fallen apart. I mean, as it exists right now, do you think this is a sustainable way for Uber to operate, or is something going to have to change if they want to continue as a going concern?
Now, this is the real big problem that I have with Uber, right? It's almost like in order for them to achieve the path of profitability, they need to go down the whole idea of autonomous vehicle. But we know that any big company to shift that technological base from manual drivers to autonomous vehicle is going to sink in a whole wave of money. It's almost like a money pit that we don't even see a way out. And that's the fundamental issue I have with this particular IPO.
Howard, are you convinced that a ride-hailing company will be able to be profitable down the road?
Now, this is kind of interesting, right? Let's look at what Uber have been spending compared to other previous company. Amazon makes very little profit in the past, but they spend money on building infrastructure, the logistic network, the cloud server, and all the service delivery. Uber, all their spending is buying market share. They give incentive to drivers. They give discount to rider. This is almost like a money pit. There's never a return and there's no limit. And so time will tell, but in a way, that traditional playbook or platform strategy, that winner take all, is beginning to unravel.
All right, Howard Yu, Professor of Management and Innovation at IMD Business School. Thanks for joining us today.
Thank you.
Thanks, Howard.